Welcome back to the Crypto Clown World channel. It is Monday, the 1st of May. I am your host with the honks, Jason Bruce, honking back in, starting a new month and a new week for Bitcoin. And with that in mind, I would ask you before I get started, please honk that like button on your way into the channel. Get subscribed, hit the bell for notifications, people, because we're going to be bringing you more videos in a timely manner in the future. Alright, so with that in mind, I'm going to swing over to Bitcoin on the 2-hour candles. Okay? And there's a few things developing here that I think are pretty important that we need to take a look at. Alright? So, first thing I'm going to say is, since the last recording, what I thought might play out did not play out. I was looking for this diamond pattern. It did look hopeful for a minute, but we did not get above this resistance level. We're not able to create a new high. This created a consolidation and a fake out and then a dump. And what this looks like right now, more than likely, is an ascending triangle. Okay, so I'm more than willing to admit when I'm wrong and try and stay fluid in these situations, because we have to be adaptable. Okay, and I did not have any short-term long positions open in regard to that. Okay, that was just a pattern I was looking for to hopefully help us swing the momentum of what I thought was a little bit of a larger pattern, which could still potentially be playing out here. So let's take a little bit more of a look at that. All right, so we've got this cup here, and then what looks to be a handle forming. All right, and we've seen a little bit more consolidation within that handle since then. Okay, so a few things to point out right now on this 2-hour time frame. There's a lot actually to point out here, so let's kind of try and get into the nuts and bolts of it. This point of control here is sitting around this high volume node at 29,263. Okay, we saw the consolidation tight around that area. It did break out above it for a short time. We bumped into this overhead resistance, and then we lost that point of control. Okay, and you're asking, well, where did this overhead resistance come from? Well, I just drew it right now. All right, and essentially it's from this swing high around that area, around that 31,000 mark that we set, the high for the year so far, down to this most recent spike. Okay, so what I think potentially is happening here is we might be seeing a falling broadening wedge, and within that, sort of a cup and handle, or even a bit of an inverse head and shoulders. So right now what's playing out on potentially patterns within patterns. Once again, we have to stay fluid, but I am seeing some things here that make me think that we have a chance to move back to the upside this morning. One of those things being, okay, that there is actually a pretty strong hidden bullish divergence that is forming at the consolidation of the handle of this cup. Okay, which once again formed within this larger falling broadening wedge. All right, now what this is telling us is that price action at least has to play out to the next point of resistance, which, if you'll take a look at this Fibonacci that I've laid out here, I'm going to cut this music down just a tad, and that's, there we go. Okay, so what I'm seeing here with this Fibonacci is this point of control is actually just below this 0.618 fib. All right, and this golden pocket area just above that. That golden pocket stretches from about 29.3 up to about 29.350. Okay, so that area right there is an area that I would like to look to see Bitcoin spike back up to. That way we can retake this point of control and potentially break out of these sort of overhead resistance lines that we're seeing here. So We can start measuring this in a few ways in terms of how this breakout may occur. Okay. So if we're looking at this playing out as a cup and handle, we would just measure from there to there and then bounce up from there to there. And it would take us up to this area around 33,400, 33,482. Okay. That's if this cup and handle were to play out. All right. And that's, you know, if it were to like play all the way out. Now just short term, or a little shorter term, in terms of like this wedge. All right. If we get the breakdown, or if we get the breakout on this wedge, it's going to take us up to a pretty close to a similar area between about 32.5 and 32.9. So those areas are quite possible right now if we do break out of this point of control that I highlighted. Okay. Now, sometimes with these triangles, they can appear to be, you know, an ascending triangle, and we can still get more of a breakdown here. So we may still come down and get a bit of a double bottom before all this action plays out. Unfortunately, none of this stuff is written in stone. So this is just something that I'm looking at this morning, as I do think Bitcoin does have potential to break out. Now, keep in mind, we did just have a monthly and a weekly close. So I will be breaking that down here in a little while as well, but I did want to move into this shorter term price action because we did see some volatility here recently. I think people may be looking for Bitcoin to go a lot lower. Short term right now, I don't think that's realistic, at least for this morning. We'll go ahead and take a look at why. And the likelihood of what I'm seeing here is that this is a shoulder, head, bit of a shoulder, okay, and that we may be seeing something like that. All right, and it may even be playing out, you know, even a little more like this. All right, but once again, we have to be fluid in what we're looking at here. Well, let's say we break out of that 0.382 fib. It's going to take us up above the 0.5, okay? And even a little more aggressively, it could take us up above that point of control, depending on how you're measuring that, okay? Some people are going to measure it from here to here and bring that up to here, okay? Some people are going to measure it from here to here and bring it up to here, all right, if this is skewed like that, okay, which it kind of is right now, okay, because we're looking for a defined neckline, all right? So we could even come up to this area, break out, come down, test this neckline, and then come all the way back up to this point of control. Once again, let's stay fluid, but right now, tight moving average is on the 7-minute, okay? And it does look likely that price action is going to move up to this 99 EMA, which is at like 28.7, 28.724, somewhere in that area. Okay, and if that does break out of that area, then we could see this larger right shoulder form. And usually, when you see a higher right shoulder, that gives you more of a likelihood for a volume breakout. Another thing to keep in mind, take a look at this VRVP, this visual range volume profile, which is just a great tool. We've got this high volume node sticking out where we're consolidating here in this potential head and shoulders pattern. And if we do move above this higher volume node, there's really nothing here. And this was a quick drop, you know, so there's a good likelihood that we just move right back up to this next liquidity zone, which once again, it's right around this 29.2 area, and the hope would be that we get up to this golden pocket, consolidate in this area, and then, you know, maybe we even make a cup and handle here, That allows us to break out. I'm just trying to be fluid right now because there's a lot of volatility in the market, so we just need to understand there's smaller patterns that need to play out before some of these larger patterns can play out. I was actually taking a look at the 7-minute before I started this broadcast, kind of trying to see if it would reset. It does look like it's reset here for us for the short term. But what I really do want to highlight, excuse me, that is super important for this morning, okay? Bear with me just a moment here while I reset something. So what I really do think is super important for this morning is this hidden bullish divergence. This is such a nice hidden bullish divergence here, where we've got this swing down on the candles closed right here, okay, and corresponding with this swing down on the RSI, and then we have this swing down here, which is higher than this swing down, but this swing down on the RSI is much lower than this one. This is a hidden bullish divergence, and what it's actually creating is kind of a bull flag on the RSI here, which tells us that this is potentially a bullish pattern, which may even possibly be an ascending triangle here if we connect those 2 points. All right, so we've got an ascending triangle, which is the handle of a cup and handle just playing out inside of a falling broadening wedge. Okay, and this is all happening on the 2 hour with this hidden bullish divergence, and I think this gives us a really good shot of seeing more upside. Okay, so just to entertain the bearish case, if for some reason we see a flash crash, because, and I'm going to get a little more into like news and fundamental stuff on this broadcast as well. Okay, if we do happen to see a flash crash, the measured move of that would actually take us right down to this 200 weekly moving average, which is an area that I've been highlighting for a long time as a potential area for a drop, because we really haven't solidly retested that since this breakout here. Okay, this really just was a breakout. Like, we came up and failed, came back down, broke out, and we haven't touched this since then. So a retest of it is not out of the question, and there's a few things that tell me that may be possible before we move up. Okay, so I'm not saying what I'm seeing on the 2 hour has to happen, and you know, we could just get a move up where this 2 hour would carry us up to like I was saying, this 0.5, you know, we have resistance here. So, you know, if we draw this like we had it before, where it was like the line was up here, right, and this was the breakdown level, maybe we come up and get a bearish retest. All right, so we have to be fluid, but that is a measured move, and there is confluence there. Okay, so we'll just keep that as a possibility, but I don't see it as the probability. This type of a pattern has about a 68% chance of breaking out to the upside. All right, okay, so there is a lot of support and resistance here. Let's keep that in mind too when we expand this visual range volume profile here. Look at all these high volume nodes here. Okay, look at them all. I have 1, 2, 3. It's a little smaller one, but we'll say 4, 5, 6. Really 5 large ones. All in the range between about 27.3 and 30.3. So, you know, every $500 or so, there's significant support and resistance in this area. We've spent a long time in this area, as you can see. days and days, hours and hours of consolidation. And really is just consolidation. To be completely honest, it does look like sideways accumulation and consolidation for me. All right. And we can get into potentially what type of an accumulation that is. I'll try and bring up that information here. Let me see if we can learn a little something here. Because I do believe this is potentially what's going on here. And shout out to Chris at Crypto for this. Because he really is good at calling out these Wyckoff patterns. But you can see right here, okay, where we're in this consolidation this spring right here, okay, and it really does look like this build-up phase of the last part of this phase D, okay, before we rocket off into a phase E. And I've talked about where that could potentially go, okay. I want you to realize that this is very, very similar to what we're seeing play out here. Okay, it's very similar. So keep in mind these accumulations don't have to be perfect, but this last phase, this last coil is potentially in effect here right now. These low stochastics on the 2 hour are nice this morning as well. So that does show us a likelihood that we'll be bouncing in the short term. And then what I would also keep an eye on is this downtrend line of the upper part of this flag on the RSI. And if this RSI breaks out of that, then you have a high likelihood of making an impulsive move. Okay? So obviously you get above the 50 level, you're gaining strength, but you break out of this line, then you're more than likely going to make a more impulsive move. So let's watch this 2 hour time frame for Bitcoin this morning. Okay. Now I did say I get into some more fundamental events, and I just want to highlight right here that there is some stuff going on with the Fed this week. Okay. So there is some data coming in. There's some manufacturing data that's coming in this morning where the forecast is supposed to be higher than expected. I don't know if any of this stuff will have too much effect on the volatility today, this news itself, but keep in mind some of this stuff is probably relevant for some of the larger markets, including like construction, real estate, all that stuff. So moving through the week, there's some job and factory information that's coming in on Tuesday. These job openings are projected, to come in lower than the previous projection, which was 9.9 million. Is projected to come in at 9.6. Fed wants less jobs out there, less jobs available, and less people employed. So, you know, really what they want is just totally unrealistic. It, in my mind, is the condition of an unhealthy economy. You know, if you have less job openings and less people that are employed, higher unemployment is essentially what they want. So they want higher unemployment and less job openings. That's a contracted economy, folks. They want a contracted economy. All right. And in the face of what could potentially happen with our money supply, you know, let's say that BRICS comes to a head and, you know, things worsen geopolitically and China and other countries decide to dump their debt back on the US. Well, what happens in that case? There's a liquidity crisis, and that liquidity has to go somewhere. And logically, in my mind, I've been thinking, okay, if they send all those dollars back here, it's a huge influx of money. Well, all that money is going to go into the cryptocurrency space and other assets. So best idea right now is to front run that. And there's other fundamentals that I'm going to get into with other cryptos and things that we can touch on of that nature. But the main thing this week with the Fed that I believe we need to take a look at, all right, is on the 3rd, Wednesday. On There is this Federal Reserve interest rate statement, and Fed Chair Powell will be speaking. So my plan is to be going live at that point for you guys so that we can see what's going on with the markets and get an idea of exactly how honking bad it might get in Clown World, or good on Wednesday. On More than likely, the idea is that they're going to continue with the rate cuts at 0.25. But we'll see if they throw any curveballs. If they completely back off, or if for some reason they say they're coming with 0.5. If they said 0.5, you see a huge drop in overall markets and in Bitcoin. If they say 0.25, I think we can continue to stay healthy. And if we see, if they go to 0, I think we'd see a huge short-term pump. So, with that in mind, let me jump over to the short-term, the larger markets, because I haven't touched on the ES1 in a little while. So we'll take a look at the E-mini futures, and there's reason to think that there might have been some decoupling there, but I think more what's happened is a decouple of sort of the time frame that the patterns are moving on. I think that Bitcoin may just be moving a little ahead of the larger markets. Okay, let's get another window up so we can kind of compare these a little better. All right, so we're just going to take a look at this all-time history index, and so you can see what I was kind of looking for to play out here did not necessarily play out. But we still may not be too far off schedule with that. I'll leave that up for a moment. All right, so if we take a look at the 2-hour for the ES1, we've got this cup and a handle and a move up from that, actually. So, potentially we see Bitcoin with this cup and a handle and a move up from here. So it may just be that the S&P is front running a little bit. It maybe seemed like Bitcoin was front running there for a little while. This extended cup and handle idea didn't quite work out, so we got this dip here. This looks like a super obvious cup and handle breakout right there. Okay, so what we may see here, like this was our neckline, right? So the healthy thing for the S&P would be to see like a retest of this neckline and then a move back up, and like the target of this cup and handle would be pretty aggressive. It would be somewhere in that range, okay? And oddly enough, that's really funny. That corresponded perfectly with this previous measured move where this pattern actually broke down. So, just odd confluence there. Not necessarily something that you would normally see, just odd confluence. So, interesting stuff there on the ES1 for the S&P E-mini futures. Did make a nice move this morning though, so if you are in the S&P or the stock market, I Look for short-term consolidation. Let's take a look here. And, you know, sometimes when you zoom in, it gives you a little better picture of what you might have been seeing. But this isn't a flag here. You know, if you look at that as an ascending, then more than likely that's going to move up. If you look at that as a rising wedge, which it is just slightly rising, then maybe that breaks down. You know, my inclination at this point is that probably moves up. I'm going to tell you why. This is going to be a little bit more of an extended recording this morning, just FYI. So if you are watching, please make sure, if you haven't, honk the like button. If you're not subscribed to the channel, hit the bell for notifications. Please, if you're getting any value out of what you're seeing right now, because I think you should be, this is good stuff right here on where we might be going. So the important thing here is that this is a bullish divergence. Okay, swing down on the RSI, lower here to this swing down. This close on the candle is slightly higher than this close here. Okay, so lower RSI, higher on the price action, higher RSI, lower on the price action. That is a bullish divergence, and it does make this pattern more likely to play out when that's bouncing off the bottom of it with low stochastics. All right, so let's move into the 15-minute time frame, because that's where we just got our close. All right, so you can see this looks nice with tight moving averages here. You're moving above the point of control, and the likely target for this flag this morning is a nice one, pretty close to a previous target I had there, around 4,260 for the S&P. That would be a nice move for people that are looking to scalp the market this week. It's actually looking pretty bullish. So that is the S&P ES1 E-mini futures. Let's bounce back over to Bitcoin, see how that consolidation is going there. It is in a pretty tight flag right now. So we can also look at this like this. It's a really tight flag. Okay. And if for some reason the little head and shoulders pattern that we were looking at doesn't play out here, okay, keep in mind we were looking at that on another chart, so it's not highlighted, and this has a little less noise on it. That Binance chart that I have is for more real short-term support and resistance, but I did want to use this as a little cleaner so that we can get an idea of what might also be happening here. If this flag breaks down, we'll see pretty quickly what happens here. It's going to take us to an area just south of $27,000, and believe it or not, this area I do believe is safe for a bounce as well. As long as we don't go below this area, I don't expect further bearish action for the week. So this is my line in the sand for the week. If this breaks, feel free to short the market down to this 200 weekly moving average around 26,000. Okay, and if this breaks, the likelihood for the CME gap to fill just above 20,000, I think it's like 20.4, that's going to increase quite a bit. So we don't want this area to break for any reason. Could end up being an accumulation zone as well, so something to keep an eye on there. But for right now, we'll keep an eye on this flag, and the idea would be that hopefully this is creating, you know, like I was looking at before, a possible little inverse head and shoulders here where we can get more of a move to this next higher volume node. All right. But looking at this, all-time history index, this looks a little less likely to possibly play out there, but we'll continue to watch it, okay? And we can see that we're pretty tight. Pretty tight within this area right now, okay? So as we continue to move through this price action here, bear with me for just a moment. As we continue to move through this price action, we'll get a much clearer picture this morning. It does look like it may want to move down in the short term. So we'll see if we have to reset on this smaller time frame and if this has to break down or move up. See if we can get a few more clues here. Take a look at the Bitcoin dominance this morning. Still did not get a move back up to this 200 weekly, which would represent about a 5% move in dominance. Let's check out our 15-minute candles here. Those are going to be the most relevant for right now. Maybe even the 20-minute. Let's move over to the 20-minute. Okay. The 20 minutes kind of giving you a similar pattern to the Bitcoin price. Alright, so Bitcoin may be trying to regain its strength here. But again, the idea would be, something like this. All right. And there is some bullish divergence playing out to that effect. So that's potential for pushing up the dominance there. Definitely potential. But the 7-minute doesn't look like it wants to hold that point of control. So that's something to keep an eye on too. Just short term this morning. Alright. So we'll continue to watch that. Swing back over here where we had some of these other drawings. I'm going to drill down even further here. We'll get the 3-minute, and the 3 minutes trying to dump. But let's see if on the 3-minute we're even seeing a repeat of that. Alright, so we could see something like that. Let's see if that plays out on the 3-minute. I'm just going to leave that right there, and we're going to take a look at a few more things here to try and get a better idea of where the overall markets are going. Okay, so we're going to take a little bit more of a look at what Ethereum might be doing as well. Alright, and I want to look at what Ethereum is doing in conjunction to its Bitcoin pair. And what this actually looks like is maybe a little bit of a cup and handle forming here. if that were to play out, let's back out a little bit here. Switch over to the 24-minute. We just had a close there. Okay. Yeah, that's actually pretty obvious pattern. You can kind of see that. You can call it whatever you want to call it. Inverse head and shoulders, maybe a little bit of a cup and handle. Okay. We can see this. This is pretty obvious here for Ethereum this morning. So I think alt's actually more likely to play. And that was another scenario I was going to potentially highlight, that maybe we see Bitcoin just grind sideways right now and our altcoins play up, because the altcoin Bitcoin pairs have been really beat to the ground. I'm going to try to jump over and do a recording on some alts this morning to get us a better picture on that as well. But what I'm seeing here right now, it does look like Ethereum could be making a move against BTC. So let's take a look at the ETH USDT valuation. This is just super flat. This gives me like inverse BART vibes. Okay. So I think that's pretty likely to at least come back up to this point of control. Should probably be like your 0.618 fib. It's actually up at the 706, which you can see with altcoins. See it go to that 706 or 786. Okay. And shout out to the Crypto Lifer, by the way, for the 706 Fibonacci and so much more, honestly, that he's taught me. But that 706 Fib is like an institutional area that they like to accumulate, and you can see it landed right on this POC in that high volume node. So super interesting with that for Ethereum this morning on this 24-minute time frame versus its US dollar pair. And that area of confluence is just above 1900 at about 1904. So something to keep an eye on there. And, you know, it looks like if we drill down a little bit now, because we're at 628, so we just had this 7-minute close. And it does look like this 7-minute is potentially going to make a move up for Ethereum. So that should mean that BTC is moving up. But the interesting thing here, this is fantastic to look at, okay? This Bitcoin dominance is losing it, but I'm sure if we take a look at the pair itself, yeah, this is exactly what I wanted to see here. And honestly, it's really about time, because this whole thing has been a little bit crazy. Bitcoin's been pretty dominant over this run from like what, 20 to 30,000. Obviously it's run up about 100% from about 15.5 to 31 total, but just from the run to about 20 to 30,000 or 20 to 31,000. So it left a lot of altcoins in the dust and their respected Bitcoin pairs as well. And I think what we're about to see is the altcoins catch up. Dominance is going to give it up a little bit, and hopefully Ethereum and some of these altcoins will start to get a little more market share. Okay. And once again, the idea, I believe, is just the front running of what is going to be a liquidity crisis in this country, because we're going to be overloaded with crappy US dollar, Federal Reserve Treasury note, toilet paper debt that we're not going to know what to do with. And the best thing to do is going to be to front run those markets right now, because people are going to pump their bags heavy when that liquidity comes in. And I mean, God knows the form that liquidity is going to take, folks, or if it's even going to touch the hands of the common people, or if it's just all going to go into some sort of crazy power or debt consolidation. All right. Regardless of any of that, crypto looks really bullish right now. So I'm going to swing out from the short term to the longer term. Okay. So I'm going to go back to this USD index, and we're going to highlight what happened on, first of all, the daily time frame. Okay. So we had this daily close, and on the USD index, we actually closed with a gravestone doji. Okay. And this gravestone doji, yeah, definitely lost a key area there. Okay, so that key area was the middle Bollinger Band, 7 EMA, and the 25 EMA. Okay, and other key things to look at, potentially there might be a flip on the stochastics RSI around the 50 level, and that's not good. Okay, that can be a really bearish sign. I'm not sure it's 100% confirmed yet. Let's see if we can click in there. It does look like it's trying to confirm right now. All right, it's not something you want to see. Okay, maybe somehow we can get a flip back on that, but that's not something you want to see on that daily time frame. All right, and you know, we do have this point of control down here. That's around 28,000. Say if that doesn't hold, the likelihood is that you revisit the lower Bollinger Band and look at the confluence on that. It's right there on that measured move that we took on the breakdown of the flag, which comes down to that area. It's just below that 27,000. So that would be pretty ugly. And who knows, it might just happen really fast. It may just be a band-aid that gets torn off there. But, you know, once again, we have to see those smaller time frames play out. And, you know, who knows if this wicks back up this morning and, you know, this turns into a, you know, long wick on this daily candle. You know, we're above 29,000 and back above this middle Bollinger Band. Then we can try to gravitate back up towards the upper Bollinger Band again. All right. The only issue being, you know, we did break above the upper Bollinger Band twice in this move so far. We've been staying really bullish. We have not retested the lower one yet. So there is some likelihood that we do. Something else to keep in mind, you know, this could paint a larger, you know, bearish type of a pattern. Maybe something like this. All right. Not necessarily the most defined neckline. Okay. Maybe look at it a little more differently like that. Something like that. Okay. If that were to break, it would be a pretty ugly move. Take you down to about 23.3 on Yeah, 23.7. Somewhere in this area here. Alright. If that did actually play out. Not saying it has to. But it would take you down to this next volume area. Okay. So we'll have to keep an eye on that. But once again, I do think the 2 hour can carry us this morning. Alright. So we'll highlight the weekly close here. And you know what I highlighted here, maybe this just cuts off right here. Alright. I do want to highlight the potential for something on this larger time frame. Get rid of that for right now because it's a little noisy. But what we might be seeing, it's not necessarily what we all want to see right now. But what we might be seeing be something like that. Okay. And that's like pretty textbook Elliott wave pattern, 5-wave set. And that would necessitate, you know, some type of a correction. It's something like this. Okay, or we just retest this 200 weekly, or whether it's a little more extended wave set. You know, maybe we see something like this. Come back down to the 200 weekly. Come back up. Hit that as resistance and come back down here, maybe to this point of control, which is around 16,000. Possible. Where's that CME gap? That's around 20,000. Let's plot it out for that. So let's say we come down to that CME gap. So maybe we see something a little bit more like that play out, right? Something else to note on this weekly time frame. This is just, that's not good. Okay, the loss of momentum on this stochastics RSI just bad. It's bad. It's not good. It's bad. Okay. Let's jump over to the monthly. Let's clean this up a little bit. Monthly close. The monthly actually shows the stochastic momentum on our side, and it shows that it's just above the 50 level with this blue above the red, which means that the overall trend right now is actually up. Okay, so on the monthly, delete my Bollinger Bands? Okay. On the monthly, we're still trying to gravitate to this middle Bollinger Band, which is around 31.685. So that's super interesting in and of itself. Okay. We're above all the other major moving averages and points of confluence. Maybe we just need a retest of the weekly or the daily or even the 99 EMA before we can make that happen. And 99 EMA is all the way down to like 17.9. What if we have to come down here and there's like a flash, double bottom again at like 15 to retest this? I mean, we already retested technically twice, in my opinion. But it doesn't necessarily mean that we won't get a larger retest. Okay. But this is still huge. This is also huge. So stochastics RSI and RSI are above 50. And, maybe... And this lends itself to the theory of what I was potentially thinking. What might happen for Bitcoin this week? Maybe Bitcoin just grinds sideways. There's not too much up and down. And by grind sideways, it could even come back down and revisit this 200 daily. If it just wicked below that, 200 daily right now is like 21.8. If it just wicked below that and created a double bottom, with this area, that would be in direct confluence with the CME gap. So maybe some Bitcoin starts floating into altcoins. We'll just have to see how all this stuff continues to play out, and let's continue to update on the shorter time frames as well. It looks like the 7-minute is bouncing. Okay. So with the 7-minute bouncing, gravitate to the 99 EMA. It's 28.7. And Bitcoin can make more of a decision. But I do think it's likely that we get some upward movement this morning. Alright, so I think the picture right now is pretty solid overall. This 45-minute has a little bit of bullish divergence on it. Yeah, I think we can make a move back up this morning, so let's see where that takes us. And then the idea, is that we're in a larger pattern. And here for Ethereum, this pattern's maybe a little more symmetrical. Okay. That's nice confluence up in another area that I had highlighted there around 20,090. So I think we have a chance to make moves back up. See if there's bullish divergence on the 2-hour for ETH the same way there was for Bitcoin. Yeah, there is. It's pretty much exactly the same thing here. So we've got this hidden bullish. Swing down in price action here is lower. Swing down on the RSI is higher. Okay. And we came down here and reset. Like, even if you want to get crazy and draw it from here, right? That's still bullish divergence because this closure up here was higher than this closure, but this swung down lower, and this swung down lower, but this RSI is higher. Okay, so the idea is that we've got both bullish divergence and hidden bullish divergence here. Okay, and those could play out with a nice move for Ethereum back up above $2,000 all the way up to about 2,090. So we'll see if fun stuff happens for Ethereum and Bitcoin this morning. That is definitely the larger idea. You know, and something else to point out, and you know, it really is kind of crazy, but Jim Cramer, right? Jim Cramer. I'm going to pause the music here for a second, okay? Jim Cramer.
Please don't assume, therefore, that it's not still being manipulated. And I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now.
Yeah, you're crazy, buddy. You're crazy. So this is Jim Cramer, all right? I'm going to back this up and I'm going to play it for you again, okay? This is Jim
Please
Cramer.
don't assume, therefore, that it's not still being manipulated. And I would sell my Bitcoin right into this rally. And believe me, I had been a believer one time in Bitcoin. Not here, not now.
All right, so that's Jim Cramer. That was towards the end of March. All right, that was towards the end of March. So I'm going to dip out to the weekly time frame. I'm going to show you exactly around the time that Jim Cramer said that. End of March. It was right in here, folks. Right in here. And what happened, Bitcoin made a move from about 28,000 all the way up to 31,000. More than a 10% move. Okay? So now, Jim Cramer, folks. Jim Cramer stated, as of yesterday, Bitcoin will shrivel up and die soon. So that's some lovely FUD out of Mr. Cramer. Just let's keep in mind there is something that's called the inverse Cramer ETF. Basically, people trade the opposite of what Cramer says. So good chance that Bitcoin continues to move up from here based on the inverse Cramer. But, you know, when it comes down to it, some people are really excited, you know. Some people would like to see that, like this lady here, Bitcoin Karen. She is happy that Bitcoin is still below 30,000, but she's still very upset that the CEO of Bitcoin has not returned her calls yet about her desire to purchase some Bitcoin at $10,000, which I don't believe is likely to happen for her or Mr. Cramer. So with that in mind, real quick, let's just jump back into the 7-minute time frame for BTC and see what our chances of holding this area are. We're still just kind of in this tight area, okay? And for Ethereum, we're still in this area, in this larger triangle, and kind of still just hanging out for Bitcoin. All right, one more thing I want to bring up just real quick before I jump. We'll see where our fear and greed index is at. We are back in greed at a 63. I want to say that's the highest we've been this year, which is interesting because it doesn't correspond to our high for price. But if we look here, this is kind of coiling, okay? So I do think that this fear and greed index is going to continue to be key, and we don't really want to let go of anything until we see this greed get up into the 90s. We did see that greed get up into the 90s in 2019 as we moved into June, okay? So I think it is still possible that we have a run up at the end of May into June and maybe even July. Possibly the markets don't pull the sell in May and walk away trick. It may be that, you know, investors are willing to work a little further into the summer to establish positions and take profits for a larger swing later into this year for October or the halving event early next year. We'll have to see how much price front runs the halving. If there's a dump around the halving like there was the last time in early 2020. Obviously, there's still a lot of uncertainty out there with the larger economic picture. We'll be getting more news on that later this week. I'm going to go over altcoins in between now and then, as there has been a lot of movement in that space as well. But with all that in mind, I am Jason Bruce. This is Crypto Clown World, and I'm going to get honking on out of here, folks. I hope you've enjoyed this update. If you have, please, on the way out, if you didn't, make sure you're hitting the like button, get subscribed to this channel, hit the bell for notifications so we can bring you these videos again in the future. I do thank you very much. Make sure you have a fantastic Monday. God bless you all, and take care of yourselves. We will be talking to you soon. This is Crypto Clown World.